They fly private. They own multiple homes, they drive six-figure cars, and yet they often pay less in taxes than the average 9-to-5 employee. It sounds unfair, it sounds rigged. But here's the truth no one wants to admit: T's legal. It's strategic, you can copy. Today, we're exposing how the top 1% legally reduce their tax bills, and the simple moves you can start making today, even if you're not rich. The myth of high income equals high taxes. We were taught to believe that the more you earn, the more you pay in taxes. But the 1% don't play by that rule. They don't rely on earned income. They rely on strategic income, and that one shift, it changes everything. Because not all income is taxed equally. Let's break it down. Salary taxed the most, business income taxed less, real estate income often offset, and passive income from certain assets sometimes not taxed at all. It's not loopholes, it's not cheating, it's understanding the code and using it. Become a business, not just an employee. Employees pay taxes first. Businesses pay taxes last. That one sentence is worth thousands. When you're a business owner or even a freelancer, you gain access to deductions: your laptop deductible, that home office deductible, your car mileage, meals, phone bill, Wi-Fi, all potentially deductible if tied to your work. This is how the 1% turn ordinary expenses into tax write-offs, and the IRS allows it. Even a small side hustle can open the door to legal deductions that W-2 employees can't access. Strategy 2. Buy assets, not stuff. Want to know the real cheat code? Capital gains tax. The rich don't cash paychecks, they cash assets. Index fund real estate businesses. When those assets go up in value and are held for over a year, they're taxed at the long-term capital gains rate, which is often 15% or less. Compare that to regular income taxed at 22%, 24%, or even 37%. Now you see the game the rich earn in ways the tax system rewards. Even $50 a month into a growth stock or REIT starts building that capital gain advantage over time. Strategy 3. Use depreciation. Here's one of the most misunderstood tax tools: depreciation. When the wealthy buy real estate, they don't just earn rental income. They also claim depreciation, a tax deduction based on the idea that property wears down over. Their property is still appreciating, they're still collecting rent. Yet they're writing off part of the building's value legally. It creates a phantom loss that reduces their taxable income without losing any actual money. And this is why real estate is one of the most tax-efficient wealth vehicles on earth. You don't need to own a skyscraper, even a small duplex or Airbnb qualifies. Strategy number 4. Tax-free retirement tools. The 1% maximize every tax-advantaged account. Roth IRAs, HSA accounts, because these tools allow you to grow money tax-free, and in some cases withdraw it tax-free, too. The rich use retirement accounts not just to save but to shelter income. And while the contribution limits may seem small now, the compounding effect is massive. Start early, and you're using the same tax armor the 1% use on a smaller scale that grows with you. Strategy number 5. Hire family members legally. It sounds strange, but hear this: many high earners legally reduce taxes by hiring their children. They pay their kids a reasonable wage for real work, like admin tasks or content help. That wage is a business expense, reducing taxable income. And the child pays little to no tax if their total income is under the threshold that's legal. And it's how wealth gets passed down with less interference from taxes. What you can do today, even if you're not rich. You don't need millions to play smart. Here's how to get started right now. Start a side hustle. Even if it earns just $500 per month, open a Roth IRA and invest in growth assets. Use an HSA if you qualify, it's triple tax advantage. Track your expenses and learn what's deductible. Learn basic bookkeeping or hire a low-cost CPA. Shift from consumer to owner, even in small ways. Every step you take toward strategic income makes you less reliant on high tax earned income. The 1% don't hide from taxes. They study them, they structure around them. And they legally use the rules most people ignore. But now you know, and now you can copy the blueprint. Because the tax code isn't just for billionaires, it's a manual and it rewards those who read it. If this opened your eyes to the strategies the wealthy use, like the video, subscribe.